The supply chain is at what level in your, because we see when things can build up at a port if the rails aren't working or if the truckers are on strike or something like that. So, I mean, it really is a miracle when everything runs so smoothly. Where are we right now?
Well, parts of the supply chain are pretty well recovered. Let's go to the ports. In L.A. and Long Beach, there are essentially just a handful of ships, if any, waiting to get on dock. That's pretty well normal. There's really not an abnormal amount of containers sitting on dock.
But part of the problem is the freight's going other places because they have their own issues with the longshoremen, and people are worried about getting caught up in a strike there.
That has occurred. There's been some shift of container freight to the East Coast and to the Gulf Coast. But we're also seeing a stack up in containers still trying to get into warehouses for distribution. So I think we've got to, on the back end of the supply chain, we've got to work through inventory through this season and into next year so that that part of the supply chain can get back to normal.
Just thinking about, okay, you use hydrocarbons, and then I'm thinking, okay, trucks. There's some electric trucks coming, but we're not there yet. We got a long way to go. Then I think about air freight, and it's hard to replace jet fuel. What would you tell policymakers about making it easy to find energy domestically? We want to do renewables, but how long? We heard Larry Fink finally figured out that it might take 70 years to get off oil. Thanks, Larry, that you finally came around to that, what everybody else knew forever. But how long do you think? To 2100 before we're...
Yeah, so for right now and into the foreseeable future, we need an all-of-the-above strategy, which is what you're talking about, Joe, right? Which is we're making segues into bio and renewable diesel. Union Pacific's using those fuels. We're also developing hydrogen as a primary fuel. But it's going to be a long time before the entire industrial environment converts. You know, certainly decades, too, but that's a hard call. In the meantime, we need technology to be advancing. That's part of expensing R&D immediately, right? It all connects back into some of these issues. Is there anyone in the BRT
that doesn't think R&D expensing is important?
No.
Not a single person?
Everybody at BRT believes
permitting
it's
or R&D. They could do both, but they'll do neither.
We have hopes that this Congress can do both.
Which one's more likely?
It's hard to say, Becky.
Yeah. We just talked to Scott Kirby, and he said, yeah, we think a recession's coming, but not based on anything he sees in his numbers. He's got lots of bookings going out. Railroads may be the best gauge of what's happening with the economy. What do you see?
Yeah, so we can see things like the housing market has clearly slowed. Parcel packaging has clearly slowed. We're seeing that in both paper as well as parcel shipments. But there's parts of the economy that are still percolating pretty good. Some of the reshoring, onshoring is creating opportunities for us in metals. In infrastructure construction, we're seeing it in things like rock and cement and steel. So it's a mixed bag. Clearly the economy is slowing, and clearly the consumer side of the economy is slowing.
It's been around since the 19th century, but I'll bet you that the computer systems that go into keeping everything, keeping trains apart and keeping trains from being delayed, that can make or break a quarter, can it? The logistics.
Yeah. Like all industrial companies, we're a technology company now, and we invest in things like precision gate technology, so truckers that get onto our intermodal ramps can do so without stopping. They're 65% more efficient on our ramps. We do it in what you mentioned in terms of controlling the network through computer-aided dispatching. That's more sophisticated than it used to be. Precision digi-crew tools, so that a crew, instead of having to go to a depot and tie up at the end of the day on a terminal, can do it on a handheld device that really simplifies their day. It makes our data more accurate.
When you read or watch CNBC and we talk about how high we're going to go with interest rates, are you and your peers, is it, okay, we got to get inflation under control? It's so insidious and it's so bad for so much of the economy that I'm willing to accept, I mean, really hurting demand and hurting growth rates and raising unemployment, all these things that go along with it. Is it worth it? Do you want them to err on the side of going far enough to break the back of inflation? Or does it just feel like we're finally humming after the pandemic? You're going to make sure that we screw that up? It just seems...
I think there's no doubt that some demand is going to be destroyed as the Fed raises rates.
That's
economics. Just how much and how much is needed, that's really their call. What we're going to do is we're going to ship what we can when it's made available. This transition from the goods economy to the service economy, that's real as well, and that's impacting our demand as well.